Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Okay, the new short position and short activity reporting rules for institutional investment managers is now out on the Federal Register with an effective date of January 2nd, 2024. To be completely honest, Uncle Frank hates this crap because I already know hedge funds don't follow rules and regulators selectively enforce them. And I deeply believe we're only seeing this crap because the Fed, the Treasury, the government, foreign governments, prime banks and brokers all over the world are concerned about the leverage levels of the hedgies or non-bank institutions, but only as it pertains to the basis trade. You know, things that can hurt them, like systemic risks, bank failures, things that can hurt politicians, and their chances of being reelected or embarrassing headlines. I believe they could give two shits about what's happening to us, nor will they even admit anything is actually happening to us. But someone in my chat wanted to know when this shit show would go into effect, so don't ever say I don't give the people what they want. Now, having said that, is there any scenario that this could benefit the AMC shareholder? My answer is yes, if these new rules have a direct impact on the leverage chain of positions held by certain hedgies, causing a liquidity crisis or even margin calls, then yes. And if the hedgies follow the new reporting rules and the SEC actually enforces the rules and there aren't all kinds of loopholes and special provisions, then maybe we will see something come from all of this. I'm not holding my breath. You see what I mean, guys? This is literally from today, from Bloomberg. The hedge fund traders dominating a massive bet on bonds. A small bunch of hedge fund traders dominates this massive basis trade. They've made billions for their firms and alarmed financial supervisors. And which hedge fund traders are they speaking of? Exodus Point Capital, Millennium Management, and Citadel. And don't bother asking, all three are known short sellers of AMC. And breaking tonight from The Independent, more than 170 Epstein associates to be named after judge unseals court records. The identity of more than 170 of Jeffrey Epstein's associates are due to be revealed in the coming weeks after a New York judge ordered a trove of secret documents be unsealed. Judge Loretta Preska issued the order on Monday unsealing materials connected to the case, which will identify 177 individuals previously only referred to as John Doe or Jane Doe. The order takes effect on January 1st, 2024, and gives the individuals 14 days to appeal. Does this have anything to do with AMC? Sure it does. Did you see this headline? JP Morgan's ties to Jeffrey Epstein were deeper than the bank has acknowledged. The bank has said it shut the convicted sex offender's accounts in 2013, but its bankers were still meeting with him years later, people familiar with the matter said. JP Morgan also is 100% owner of Highbridge Capital, a short seller of AMC, and also managed some money for Epstein. After JP Morgan bought control of Highbridge Capital, the hedge fund, in stages starting in 2004, Epstein reportedly received a $15 million fee. Highbridge was also one of the 5 note holders at Hycroft Mining when Adam invested nearly $30 million of our dollars in the previously bankrupt gold mine. Turns out all 5 lien holders were or are short sellers of AMC. A coincidence, I'm sure, but stay tuned. This could get interesting. Subscribers to this channel know that Uncle Frank doesn't believe the hedgies have covered yet. After billions of FTDs, I think we would have noticed. I also don't believe they will ever cover until they're forced to. I know they will continue to use their illicit tactics because there are no consequences they can't afford to absorb. Furthermore, they will continue to manipulate and control the stock price right up until the moment they can't. What do I believe will bring about that moment? Only a black or white swan, an unexpected event that will create a crisis in the leverage chains of predatory short hedge funds, forcing their prime brokers to rearrange their portfolios. Then, and under only those conditions, will we see a reckoning of the AMC short positions. I don't care if AMC cures cancer. Since this is what I believe, my research focuses on hedgies and primes trapped in short positions as markets continue to move against them. As many of you know, U.S. stock short sellers are down $145 billion in 2023, and I'm going to focus on developments surrounding that hedgy predicament. Now, you see, here's a great example of what I'm talking about. This can't be good news for shorts in desperate need of a sell-off. From Bloomberg Monday, world's biggest ETF sees record 21 billion flow on stock rally. The chart is titled S&P 500 ETF SPY sees its biggest inflow ever. Guys, look at the red arrow. Take a look at that spike. And this headline today from one of our short sellers and Citadel's primary prime bank doesn't seem like good news for predatory short hedge funds either. From Reuters, investors dumped cash and bought stocks in December. B of A. And did you miss this headline from the Wall Street Journal on November 30th? FINRA fines B of A Securities $24 million for Treasury spoofing. The Financial Industry Regulatory Authority fined B of A Securities $24 million for more than 700 instances of spoofing through two former traders. Spoofing is a type of fraudulent trading in which trades not intended to be executed create the appearance of market activity to induce other market participants to trade against orders that were actually executed. I wonder when FINRA is going to get around to Goldman Sachs spoofing AMC every friggin' day. And over to AMC. By the close of the third quarter, it's true, AMC has been losing institutional investors. I see 42 million bought and 395 million sold. But the good news is the number of institutional put owners is diving off the chart. That could signal a reversal is coming. In my last two videos, I have been warning this is coming, and it's only going to get worse. They are going to hammer us with these headlines, especially to crush any good results we've captured during the fourth quarter. Again, from the Hollywood Reporter, box office blues. Global revenue forecast shows 2024 trailing 2023 in first post-pandemic setback. Expect much, much more of this. Well, guys, the Bitcoin ETF is on the way, and it looks like XRP will be right behind it. XRP attorney Deaton agrees to odds of spot Bitcoin ETF approval at 98.7%. From Coinpedia, Ripple News, Wall Street eyes XRP spot ETF. And from Forbes, BlackRock has quietly opened the door to a $1 trillion plus Wall Street game changer amid the $700 billion Bitcoin, Ethereum, XRP, and crypto price boom. And from Cryptopolitan, is XRP spot ETF the next big move for Wall Street? Looks like it is. And I saved a couple headlines for my Black Swan fans out there. From Shitzinga, global economic alarms, corporate bankruptcies surge 30% in America, 25% in Germany, 13% across EU as pandemic-era support fades. And then another from today, Bankruptcies on the rise following end of COVID relief measures and high interest rates. Corporate bankruptcies have seen a sharp increase in the last year as interest rates rose and following the withdrawal of trillions of dollars worth of COVID-19 support packages. U.S. court data showed that Chapter 11 filings rose by 30% in the year to September compared to the same period a year ago. This followed a decade of declines in bankruptcies. Back in June, Bank of America noted that there had been 236 corporate bankruptcies in the U.S. between January and April, double the previous year's rate for the same period. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.